Once again, the global economy is being pushed around by a place most people couldn't find on a map if their life depended on it. The Strait of Hormuz. Oil prices just dropped after days of tension. Stocks are climbing like everything's perfectly fine. And crypto, well, crypto is doing what crypto does, acting like it had 3 espressos and a bad idea. Meanwhile, military presence in the region is still high. Tensions with Iran haven't magically disappeared, and all it takes is one wrong move for this whole thing to flip again. So no, this isn't some distant geopolitical drama. This hits your fuel prices, your groceries, and yeah, your investments too. Let's break down what's actually going on. The Strait of Hormuz still carries about 20% of the world's oil. That's a big deal. A couple of weeks ago, tensions between the US and Iran started heating up. Not full-blown conflict, but enough to make markets nervous. Oil prices went up because traders love to panic first and think later. Now, that panic has cooled off a bit. Oil's come down, shipping is still moving, and nothing major has blown up. Yet. But don't confuse nothing happened today with everything is solved. Because it's not. There's no real agreement, no clean resolution. Just a temporary moment where things haven't gotten worse. And markets? Markets are reacting to that tiny bit of relief, like Europeans finding a sunny day after 2 weeks of rain. So what did markets do? Oil dropped, not because the world is suddenly peaceful, but because the worst case scenario didn't happen. That's it. That's the whole reason. At the same time, markets like the S&P 500 and Nasdaq Composite are still pushing higher. And if you're thinking, wait, shouldn't they be worried? Yeah, logically maybe. But markets don't run on logic, they run on expectations. Right now, strong earnings and the whole AI boom are carrying a lot of that optimism. It's like Americans saying, the economy is strong, while quietly ignoring the bill that's coming later. In India, it's pretty straightforward. Oil producers are feeling the pressure. Refiners are happy because cheaper crude equals better margins. Airlines? They're basically smiling for the first time in a while. Lower fuel costs tend to do that. Now let's talk about the quieter moves. The US dollar has eased a bit. Not crashing, just relaxing. Less fear means less rush into safe assets. The yuan is holding steady, doing its usual controlled movement. And then there's crypto. Bitcoin is hanging around the mid $70,000 range, and Ethereum is staying above $2,300. But don't fall into the trap of thinking this is all because of oil or geopolitics. Crypto moves because of liquidity, hype, and big money flows. Geopolitics is just background noise for it. Now let's talk about you, because this is where most people mess up. First, stop treating headlines like instructions. If your strategy changes every time the news alert pops up, you don't have a strategy, you have a stress problem. Second, don't go all in on one story. Right now, half the internet thinks everything's fine, and the other half is preparing for the apocalypse. Reality? It's somewhere in between. It usually is. Third, focus on positioning, not prediction. Because unless you've got a direct line to world leaders, which you don't, you're not predicting this stuff consistently. So instead, stay diversified. Keep some cash ready. Invest steadily. It's not exciting. It won't make you feel like a genius. But it works. Markets overreact to fear, and then overcorrect when that fear fades. That's exactly what we're seeing right now. Tell me, what are you doing right now? Buying? Holding? Or just watching this whole thing like a European watching American politics? Slightly confused? Slightly entertained? If this actually helped you understand what's going on without the usual noise, hit subscribe. Because this story? Yeah, it's not over. Not even close.